Real successful people are the ones who don't even bother about the obstacles because they know exactly what they want. Maxime Lagacé, my friends, I hope what you want is the ability to accurately track the price movement of your favorite stocks, ETFs, cryptocurrencies, because that's what we teach here. We ask you to spend 10 to 15 minutes each and every day. We put this out for free, and we appreciate you being with us. If you like what we do, of course, hit that up candle. Golly day. I think that's all that's on my mind. Hit that thumbs up button, and of course, subscribe if you're listening to us, watching us on YouTube, or if you happen to be listening to the podcast. Give us a good 5-star rating. Thank you so much, friends. We see lots of down movement in these charts. Everything on my screen is bright red, from bonds to stocks to gold to Bitcoin, although there's a little bit of bright light in gold. We'll talk about that in a minute. And of course, all the various cryptocurrency ETFs and trusts that we track. And I have some good news. Maybe I'll give that out later, maybe tomorrow, about all the stuff I've been doing with cryptocurrencies, as of course that market crashes, but there'll be an update at some point. Let's first jump into the S&P 500 and talk about that. Down for the day 1.77%, going into the second week of down movement. Big red down candle, price percent oscillator arcing over, going down, derivative oscillator gaining more downward momentum. First day of this shortened 4-day week. 2-day chart, again spiking over, going down, derivative oscillator, big red down candle. Price just a moving on down. Half day, same thing, down in the morning, further down in the afternoon. So lots of downward pressure for those of you who jumped in to that 2-day recross back on Friday the 7th of January. Short in the market's done okay for you, hasn't it? It's been quite nice on that practice trade. So again, the magic of the weekly vertical crossover and the 2-day recrosses, they can be quite nice. Again, as long as before you jump into that trade, you know what your profit and loss bands are, you know where it is you want to go. And in fact, I'm going to put that profit and loss band training at the end of today's video so you understand more how to set those. Because again, friends, it's not the profits that kill you. It's the losses that kill you. And you've got to limit those and live to trade another day and deal with the psychology. The reason I encourage you to, again, learn by doing this, not with real money, but practice trading. And then when you start thinking you're getting good, small amounts of money in something like what we call a fractional trade, where say you buy $100 worth of a stock. And again, fractional trading would let you do something like that with even the S&P, where they fractionalize a share of it. And then you can see how good you do. And you can learn things like what happens when you jump into a trade and it doesn't go your way, as we saw back in December. Now, we had some caveats about that anyway because our derivative oscillator had not flipped with the price percent oscillator. But again, that's something you learn by doing it. What did we see happen over the next few weeks? We saw things not doing so hot that next week, not continuing to move down, and then the following week, and then that just sort of all petered out on us. Then it popped up. And again, if you have your loss band set in there, when you hit that loss band, you pull the trigger, you get out, you take your minimum loss, and then what do? This is where the psychology kicks in, that you simply bide your time and wait for another opportunity, which came with a blaze when we had that 2-day recross. That again, if you've steeled yourself, if you know what you're doing and you've done this many times before, and you know, hey, if the charts betray me, they're setting me up for something better later if I cut my losses. And then what happens? Then all of a sudden, things roll over, you get an opportunity to jump back in and then to short the market a second time when things did not recover. And again, none of this is easy, but it takes time and energy. And all we ask, 10 to 15 minutes a day. You can learn to do this if you'll spend the time. That's where we are on the S&P. What about the Nasdaq 100? Well, the Nasdaq 100 is, of course, hammering down to even more, 2.49%. Big red down candle, price percent oscillator, derivative oscillator heading down on the weekly. 2-day, again, moving in the direction of that 2-day recross back on Wednesday, the 5th of January. Hammering down, derivative oscillator, price percent oscillator. Look at the half day, moving down quite strongly too. So again, we saw at the end of the day, the derivative oscillator going negative. So lots of downward pressure on stocks. What about bonds? Down for the day 1.41%. Remember when we had, what was that? The week ending the 7th of January had a weekly vertical crossover going down. How well has that done for you? Quite well. You might say again, what do I do with shorting the market? How do I do that? Well, with 20-year bonds, you have something called TBF, Tango, Bravo, Foxtrot. That is the 20-year short fund, which has been spiking up as bonds have been crashing. With the S&P 500, you have something called ProShares Short. Now, there's others. There are, in fact, even more leveraged funds. These go up as the S&P goes down. You have something called PSQ, which is a single short of the Nasdaq 100 that moves up. Now, there's a lot of caveats with these. That is why we encourage you to practice them. Why is that? Well, it's because these funds have much higher expenses. They are revalued quite often, which again can magnify losses and can also affect how much the fund is actually going up in real money. They are set up to reproduce on a daily basis the price change. So if, like for instance, the 20-year bonds, TLT, went down today 1.41%, TBF is set up to go up 1.41%, but then be revalued the next day, so that if price does change and happens to go up on TLT, then you could see a magnification in that at the new level on TBF. So a lot of things to know and understand there. And in fact, I'm going to put a second training at the end of today's video on inverse funds, which explains all of this so much better than I can do here in a short period of time. So I'm making a note of that. I'm going to have both those video, profit and loss bands and inverse funds, at the end of today's video. You may see them pop up also during the course of this video. So we see that 20-year bonds going down on the 2-day, and of course crossing over, going down on the half day. And again, we had that weekly vertical crossover that's been in effect going into the second week. So we're not surprised at that. Now, I said there's a little bit of a bright spot. Gold was down for the day, but down the least of anything on our charts, 0.17%. So again, not down much at all, starting off the week with a little green candle, not hitting the highs that it's hit previously in the last few weeks, but nonetheless, still trying to go up. It's going to be hard if the market keeps deleveraging here, because people are trying to cover their short positions in their stocks, and many times they are selling things like bonds, selling things like gold, selling things like cryptocurrencies, which at the beginning of a deleveraging, of a big down move in the market, if that's what's happening, you can see everything move down in unison. And then things like bonds, like gold, other safe havens recover quicker and faster. So it's good to see that gold is down just a little bit, and we have a green up candle forming for the week. Price percent oscillator still trying to move up. Derivative oscillator has gone positive and gained a little energy. Look at the 2-day here. Again, we do see weakness as far as the candle on the 2-day goes. It's a solid red spinning top. Price percent oscillator still positive. Derivative oscillator still holding on. But look at what we see happening here as far as the half-day chart goes. It crossed over in the morning and turned more red in the afternoon. But again, the half-day is the least important of our charts. The most important is the weekly, and next to that is the 2-day. Of course, everything starts on the half day, but it's the smallest wave and can improve the fastest. So I don't expect gold to start rocketing up as everything else is crashing because of the remarks I made just a minute ago. But hopefully its decline will not be as precipitous. We shall wait, watch, and see. Lastly, we go to Bitcoin. I tell you, this whole market in cryptocurrencies, I'm looking at all these charts. I'm looking at the Grayscale Bitcoin, Grayscale Ethereum. I'm looking at the Bitcoin futures. I'm looking at the top 10 cryptocurrencies. We do at least see a little bit of a slowdown in the down movement. That's just for Tuesday. Those are the top 10 cryptocurrencies. There's a couple of them that are trying to hold their own. But then when we look at the whole crypto market out there, all the different industries that are in blockchain, that are innovators, that are into digital transformation, digital crypto economy. I mean, those kind of things, you're just continuing to see lots and lots of downward pressure. And again, that pressure's been on for a while. We saw that seminal move over the weekly vertical crossover and the price percent oscillator crossing over going down back in early December. And that's pretty much just kept moving. I mean, look how clean that trend line is on the weekly chart. Today, again, we've seen it move down sideways, move down. It's sort of sideways and got a red down candle that's forming. Derivative oscillator still quite negative. Price percent oscillator heading down. Half-day chart, we can see where things sort of bottomed, moved up, slid sideways, and then dropping as the week starts. So crypto markets also lots of downward pressure. All red today, my friends. First day of this shortened trading week. Hope you had a great Martin Luther King Jr. holiday. As we jump back into these markets, and we're seeing red to begin with. Now, you know how this goes. Tomorrow may be an up day on everything, but even if that's so, the overall hang on the market, lots of downward pressure on stocks, on bonds, and on Bitcoin and cryptocurrencies. Gold, still trying to hold its own, and I love gold, and I want to see it take off. Gold did me so right last time. I'm ready for it to go again. That's where we are, folks, as we end the day on Tuesday. God bless you all. It's great to be back with you. All the best from the whole team at Charting Wealth World Headquarters.